Candle Range Theory Trader back with you with another video talking about trading the Candle Range Theory breakout. So let's get right into it. The Candle Range Theory breakout is going to be a 4 candle pattern. Typically, we talked about CRT being a 3 candlestick pattern, but for a breakout, you're going to give it one more candle and you want to see a continuation. So this is how it will look on the 4-hour, and I'm also going to do some 8-hour examples. It can also be traded on the daily, but I do not trade the daily chart as it just moves too slow for my liking. I prefer a little bit quicker price action. So the examples here are 4-hour and 8-hour. So this is the foundation of how it will work. And I'm going to go over the most important part in just a second. So number one, you'll have your traditional range candle. This is at 1 p.m. or 1300 on the 24-hour clock. Okay, Eastern Standard Time. I'm on the East Coast. Next, you have your manipulation candle, which pokes above the range, closes inside of it at 5 p.m. And then 9 p.m. will give you the expansion to the downside. Okay, so traditionally, CRT, I talk about trading this candle right here. But what if you miss this candle? Well, there is a way that you can still catch one more price action, hopefully, that will continue off of what candle 3 did. Here is the most important part. If you don't get anything else from this video, you need to get this. Candle 3 must close below candle 2's low. All right, I wish I put a line there, but I didn't. But see the low of candle 2, candle 3 closed below it. Then you are clear to trade this candle looking for a continuation. If candle 3 does not close below candle 2, do not trade this model. All right. Again, I'm going to repeat it so that you can get it in your head that if candle 3 does not close below candle 2, this model is null and void. All right. We're counting on this close to show the strength of the momentum continuing down. If this close is not present, doesn't work. Now, if the close is there, all right, then we can go on to the next step and try to trade candle 4, which in this example would be 1 a.m., which is the expansion candle 2, right? So you can look at the deep study on the 1 candle, 1 hour for that. For more details on that, I'm not going to go over entry models. I'm just going to show you the 5-minute chart of this 4th candle right here. So this is that. So this will be a 1:20 a.m. entry. This is the 5-minute chart. Okay, this box represents the first hour of this candle right here. Because we're counting on this to be an expansion candle, we're only going to give it 1 hour to start moving in the direction that we want to see. If it doesn't do that, we scratch the trade. Okay, so best entry here would have been at about 120. Could have did a 5-pip stop loss and a 20-pip take profit. So, might have at least gotten 1 to 3, 1 to 4 off of that one. But you enter on this red candle close right here, expecting momentum to just continue to the downside because you're looking for a straight drop, right? A straight drop over the next 4-hour period. So that's where you're expecting that. And as you see, it's been a lot of time it's chopping around. So you just take the meat of the move and get out where you can for your profit. All right. So that's the breakout. This is the breakout of the range right here. All right. So that's the CRT breakout. Let's take a look at a long example. So we have a 9 p.m. range right here. We have our manipulation at 1 a.m. 5 a.m. Like I said, is our traditional trading time. Okay, under I don't want to say the old model, but the traditional CRT model. But if we want to trade the breakout, we trade here. But let me repeat it again. Candle 3 must close above candle 2. You see the high of candle 2 right here? Candle 3 closed above it. So because we have that, now we can go ahead and look to trade this expansion candle 2 right here. That's what we're looking for a price to break out of the range because of the strength of the close of candle 3. Candle 3 and candle 2, you have to look at those to make sure it meets the criteria. So because you're really just trading continuation. It's not even so much about a breakout as much as it is continuation. You want to see prices continue in the same direction it's been going. So at 9 a.m. is when we start trading this model. So let's take a look. Best entry, this is the first hour, all right, of the 9 a.m. candle. Good entry would have been at 9:30. All right, this black line here would be the open price of the candle. So you even have a morning star right here. You could have got in right there, or just enter when price closes a little bit above the open, and price shot up 53 pips. So you could have got at least like a 1 to 3 to 1 to 5 off of that. All right, so that would have been great. Let's take a look at a couple 8-hour chart examples. So you have the 1 a.m. range here, 5 p.m. range here, and then 1 a.m. gives you expansion to the upside. And remember, okay, candle 3 closed above candle 2. Okay, we see that candle 3 closed above candle 2. So we love to see that. Now, here's the point. Our trading candle is 1 a.m. right here. Okay, it's 1 a.m. right there. So this 8-hour candle is the time in which we will be looking to trade. So let's go down to our 5-minute chart and take a look. This would have been good for a 1 a.m. entry. You could have entered as soon as the candle opened, really. Chopped around a little bit, went up, chopped around a little bit, and then just eventually took off, right? Because remember, it should spend, if this pattern works out, it's going to spend the majority of the time just paying you, all right? It's going to chop around for the first hour, maybe up to 2, but after that, you want to see some action to the upside. So this was a 77 pip rise for 8 hours, right? So that was a great move. Now, here's one more. We have a 1700 or 5 p.m. Eastern Standard Time range candle. We have a 1 a.m. manipulation where it goes above, closes below. Candle 3. Now, it wasn't a very strong close below candle 2, but I'm not saying it has to close significantly below candle 2. It just has to be below it. As long as it does that, then you're good. And everyone who thought this was going to be, everyone who wanted to catch a reversal off of this, they might have been looking for a CRT to the upside. Nope, they got fooled by going long with this wick, and then price just tanked. All right, and that was at 1700 or 5 p.m. Okay, so let's take a look now at the 5-minute chart. So at 8:05, it would have been the best entry off of this fair value gap. Again, you want to take a look at some. If you want more info on entries, you can take a look at some of the deep studies. Look at the deep study playlist; you'll see more info on that. But this would have been a good entry right here at 8:05. Obviously, we're not trading between 5 and about 7 because the gap is too wide for the market reset. So we wait for that to calm down closer to the 7 to 8 o'clock hour. We start looking for entries, ideally off of like fair value gaps or swing highs or swing lows. And this was a 63 pip drop. All right. So this 5-minute chart is this candle right here. Okay. That is the breakout of the range. Okay. So in conclusion, rule number 1, remember, if candle 3 does not close below or above candle 2, all of this is null and void. Scratch it. Okay. Don't look for a continuation. It could happen, but it may not. So we don't gamble. All right. That's the point. You're only trading one candle, candle 4. So stick to only trading the first hour or 2 of that candle. And how you know you got it right is that the price should stay above the candles open if you're long or below the candles open if you're short. Okay. It should show that it wants to continue trend early in the candles open. So that candle shouldn't be consolidating for like 8 hours or 2 hours. Okay. It shouldn't be doing that. If it's going to be a real expansion candles, they start and they just keep right on going. They know exactly where they want to go and they get going. So use your common sense. Okay, if candle 3 is above the ADR, above average daily range, or the ATR average true range, and if it's just really just taking off and it closes strongly below candle 3 and 1 or above it, okay, if you're long or short, don't try to look for a continuation. Okay, remember, big candles lead to small candles. Okay, big candles lead to small candles. So if it's a big one, if candle 3 is just huge, like if it drops like 100 pips, don't look for the continuation on that. Okay. Now remember that this is a 1 candle model. So if candle 4 doesn't work out, just find another one. You either can look for a regular CRT, which is a 3 candle pattern, or you can just try to look for another completed candle range theory that matches this model I just went over and try to trade that. But this gives you an option to let you know, okay, maybe I want to do something different. Let me silence my phone real quick. Sorry about that. Let me see if I can, there we go. All right, so this candle model just lets you know that if you miss the traditional 3 candle CRT, you have an option to look for the continuation as long as the relationship between candle 2 and 3 work out just like I've laid out here. Now, if you want more examples, you got to go get them yourself. I just wanted to give you the general framework of what to look for, but it's all there in the chart. Okay, the chart is going to teach you more than any video can. Okay, so you know what to look for. Go get it. And have to credit T Trades for a similar model to this. It's not exact, but him and another guy, Nitro Trades as well. There's tons of great trading video channels out there. I don't have a monopoly on good trading, but what I do and what you can do as well, you take pieces and try to fit what works for you into what you're already doing. Okay, so I don't expect people to trade the 100% exact way I trade, but I do hope that this is helpful to your trading, and I can give you a piece of the puzzle to help you look for something that can help you, make money in trading and looking for easy setups to spot and to take. So with that in mind, I appreciate your time and attention. Thank you so much for watching, and have a great rest of your day. Take care.